investors looking for 20 to 30% returns in 2009. They didn't just find it in the stock market. Some of the biggest bond disasters of 2008 have led to massive rallies in 2009, and you're going to be surprised to hear who led the way. Let's go now to Brian Luke for the details, and I guess it's a little bit of what goes down must come up.
That's right, exactly, Scarlett. But remember all those disasters of 2008? Well, now they're the darlings of 2009. So what are we talking about? We're talking about auto and home equity loans. We're talking about commercial real estate loans, even speculative grade or junk bonds. All of them have been on terrific runs this year. Most of them have outpaced the stock market returns. So let's talk about some of these consumer loans. So we all know how the consumer's strapped. High credit card delinquency rates, big problems with the auto loans and GMAT getting bailouts. Well, if you bought loans packaged by Wall Street and sold out to professional investors, you've had excess returns of over 25% by owning those bonds. It's been a fantastic year for ABS, asset-backed securities is what they call it on the street. Secondly, let's talk about the next shoe to drop, so to speak.
Everyone's always warning about that.
Yeah, that's commercial real estate, right? Well, the loans, again, packaged by Wall Street and sold out to professional investors have done extremely well. They're up over 28% this year. That's another thing, the problems in commercial real estate could still be looming. However, you got to follow, the loan market. They're doing great.
Unbelievable that these are keeping pace with equities, not necessarily the NASDAQ, but certainly the major benchmarks like the Dow and the S&P. Anything in bond land that's getting crushed?
Well, there's a lot of things. Like treasuries are doing terrible right now, and they're underwater. They've lost investors' money. But if you really want to beat the stock market returns, you want to beat the NASDAQ returns, you got to go to the junk market. You got to go to high-yield bonds. They're up over 58%. Talk about double that, more than double that of the S&P. So you can get that with yields upwards towards 20% last, the beginning of the year. That's what you're earning. Of course, you have a lot of price appreciation. You've got a lot of benefits from the disaster never happening. So a lot of investors got a lot of enthusiasm from that, and a big price perk from buying junk bonds. So, and as you see a story right now with AT&T is doing exceedingly well.
Right.
A lot of the big junk names like Ford, Capital One, a lot of these names that they're just not very good fundamentally, but by owning the real estate, or by owning the loans backed by them, you're doing great.
All right. Well, we'll see if that continues in 2010. Thank you so much, Brian Luke, for us.